Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, February 18, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have a market that is in fact above all the moving averages, and you know the jingle, above all the moving averages, and the trend is in fact your friend. There's nothing wrong with this tape. We'll get a snapshot since the beginning of the week. We'll see how last week closed out of the weekly chart, and therefore we can clearly see there's nothing wrong with this tape. She is firmly in an uptrend until proven otherwise. Now, from a day trading perspective and or a swing trading perspective, does that mean or not mean money is being made? Well, it doesn't mean one thing or the other, but here's the deal. Money is being made. Money was made today in the live room and inside the numbers. Money is being made in the automagical algo system, the lazy swing trader. We don't care which way the market goes. We don't care what the market's doing. We're going to benefit from whatever's going on. Why? Because we understand how to read the tape. We understand where the trades are. We understand if we're a day trader, these are our objectives. We understand if we're only a swing trader, this is what we're looking for. Here's how we do it. Here's how we benefit and profit. That's the way this works. Has there been a material change on the daily chart in the SPY from last market day, which was last Friday? And the answer is no. She pushed up a little bit higher, $1.75 or 1/3% from Friday's close. Is that a material change on the tape? No, she continues to grind higher, period, full stop. This is a snapshot of the lazy swing trader closed trade list. Now, there's a whole lot of stuff going on in here, but we're going to focus on the column on the right, percentage of gain and loss. You can see here, Hershey and Comcast, these just triggered profit targets today, February 18th. That was the exit date. Look at the column on the right. Look at the wins versus losses. There's a lot of base hits in there, couple of doubles, handful of others. What do we do with our losses? We're going to have losses. Everybody has losses. 4.6%, 4.09%, 4.7%. So there's 3 losses in a list of about 25 on this page. Pretty good win-loss ratio, I would say. We keep our losses small and fast, and we let our winners run with second and third and or more profit targets. Here's an example on a chart of Hershey, which had a first profit target today. The average entry was 154.27. First profit target up about 5%, 162.15. Now think about it. 5% doesn't sound all that sexy to a lot of traders out there who expect 50% wins, 100% wins, 1,000% wins. The reality is this is 5% gain in the stock. What happened if you bought a call option? What happens to a 5% gainer in short order? Well, that's the one that looks like 30, 40, 50% gain in an option, doesn't it? You betcha. This is now a risk-free, emotionless trade. About Comcast, same routine. We've got about a 5.6% gain in Comcast, and what you'll know is that was a gain in the stock, dollar for dollar. What happens if you bought the option? Did you have more of a gain? The short answer is, of course you did. I'm not saying everybody trades the options, but I know a lot of traders do trade the options. What I'm giving you is the entry prices on where the stock hits support and the exit prices on where we should take first profit, turning them into a risk-free, emotionless trade. How does this work? This is a automagical algo system. An alert goes out to members via text and email alert when price hits its entry objective. On the board, posted on the board, are the stops, the exits. Another alert will go out when the stock reaches an exit. Basically, it's a hand-holding, swing trading product. How you doing? It's what we call do-it-for-you situation. Now, that was for swing traders. What about the day traders out there who are subscribers to Inside the Numbers or who would like to be day traders, who are day traders without Inside the Numbers. Shame on you. This applies to the live room and Inside the Numbers. Let's take a look at some numbers of interest. We had a 3-day holiday week. We're back in business. Markets like to float up into a 3-day holiday weekend. She did that. And by the way, let's get some numbers out on the board. The bull case continues as a floater, and we have a formula-driven number at 611.89. That was at new highs, making new highs from last week, 611.89. Mind you, this stuff is on the board at 0 dark 30. How does that translate into real time? It's like 6 o'clock a.m. Eastern Standard Time. Sometimes slightly before, sometimes slightly after. Now, here's a 5-minute chart where right of the vertical is today's activity, and you'll see where the blue line up here is at 611.89 spot on. Now, they didn't get there during the regular session, but they sure were there early in the morning, in the wee hours of the morning. We call this the thieves in the morning took away our short trade. We had a short trade posted on the board for Inside the Numbers, talked about it in the live room, but they traded away from it before the opening bell. Didn't give us a chance to get on the short side. Some traders took the ride. However, we had other trades in mind in the live room and Inside the Numbers. It's like but wait, there's more, and there is. Let's look at some numbers that were posted also down below. If she's not going to get to 611.89 or trade away from it, the flip side situation is a pullback. 610.50 is support-ish, and if below, the next number down in the sequence, 609.35. Well, let's see a little bit more about what was said around 9 o'clock in the morning, still before the market opens for business. And as you can see, even at 9:30 on the nose, 609.35 is the pivot. Important and a bounce back type of place. We had a zone first. 611 was the most recent breakout area. It's listed as 610.99. Well, they opened below 610.99. They went to test it. What was the high of the morning session, or in fact, high of day? How about 611 on the button? The former breakout area, the former high from Friday. This candle, Friday's daily candle, 610.99. That was the all-time high as of this morning. And today, the high of day was a test of that number, and she traded away. Okay, but wait, there's more. 609.35 is the pivot. How you doing? Do you think I was pounding the table in the live room at 609.35? Do you think we had traders that bought the market up at 609.35? We actually had a trade at 610 before that. And here's what was said in real time in the live room about verbatim. They can come to 610, bounce them up, come all the way down to 609.35, and bounce them up again. Both can be true. They can do both trades. They did both trades. The thing about 610 is, A, it was a big fat round number, and the midpoint phenomenon between 611 and 609.35, give or take, they did that bounce, and you could see here, that was a nice scalp with a little bit of potential. We had a trade there, and then they came back down and had a trade at 609.35. We had a bit of a bonanza-ish Tuesday morning in the live trading room. How you doing? You want to find success day trading? Are you looking for a chat room? Are you looking to have your hand held? Are you looking to trade over my shoulder? I think it's worth your while to see if it works. It does work. You have to experience it for yourself in the live room. We have patience. We wait for the market to give us the trade we want. I force exercising patience in the live room. One of the main things traders don't have is patience. I force the issue on you. What I urge you to do is pause the video. I gave you the whole thing before the market even opened. You'll see in the commentary here the same numbers repeat over and over again. We're pounding the table on 609.35, yada, yada. It is the pivot. And I urge you to pause the video, read the notes, go back to the chart, and certainly double check the work. It's all in here each and every day. everything traders need to be successful day trading the market during the trading day. We provide stocks on the move, and then we provide a list of support and resistance for a dozen markets, including the spider, all the way down to Bitcoin and everything else in between. This is inside the numbers, providing buku value to members. What's going on over in Camp IWM? Well, they're still hovering around the convergence of these moving averages, but what you'll notice here is they're eating time off the clock in a channel type of situation. We can call this a channel, and we can also say that we have a bullish situation where they move up. We can call this a flaggish situation. And what we also do know out of this is above these convergence of moving averages, which is the 20 and the 50 period moving average, certainly that puts the IWM in an uptrend situation. The trend is your friend until it's not. Now, this is in a different position than the spiders. We know that. We've been looking at this for a long time. Daily chart of the spiders grinding above all the moving averages at new highs. IWM, this is still longer term a bearish situation. So you actually have a pattern inside of another pattern. This is a bullish pattern from the low, but also until or unless you get above the high of this breakdown candle right here, until you get above the high of that breakdown candle, this market is susceptible to fall. She is bearish below the high of that breakdown candle. So both things can be true. Both things are true. Write that down. Put it on a sticky note. You can clear up some of the noise and look at it from a weekly chart perspective. Last week, they were not as underlined, not able to get back above the 20 period moving average. They are creeping along the 20 period moving average. They move down. This is a bearish, flaggish situation from a longer term perspective. It does not, and I repeat, does not preclude the market from moving up higher now, but from a bigger term perspective, larger time frame perspective, two things can be true. From a larger picture perspective, this is a bearish situation. IWM, favorite market leading indicator. Write that down. Put it on a sticky. Now, what about the folks down at the transportation department? Well, they got a different situation here. Same deal with the IWM, second favorite market leading indicator. Same deal. Longer term, it's not in the same position as the SPY, but shorter term, they've popped up above the moving averages between Friday and today. They're challenging the high over here from the latter part of January. If they can get above and bust above that high, they're free to run up to the next place, which we'll talk about in subsequent videos and in the live room et al. Weekly chart above all the moving averages. Trend is your friend. You can see here this pivot is a gateway. Above that pivot, 16.9 and change. She gets another leg bolted on higher above 17,000 for starters. How you doing? What about the Q people challenging former highs? They're at new highs, close to new highs. That's really the same thing. It's the same bucket of information. Above all the moving averages, the trend is your friend. She doesn't like to get too far above home base. She's getting a little bit extended from home base. Not too much just yet, but she's getting ING in italics, getting there. So we have to have the awareness that too far from home base, and she'll likely creep back toward home base in the name of corrective move within an uptrend situation. Weekly chart, all in all, the trend is your friend. Nothing wrong with this particular market. Nothing wrong with a market that is firmly in an uptrend situation until what? Until we can identify a sign and or signal of a trend change that morphs or it starts from an intraday perspective. Sometimes you'll get an intraday reversal. You'll get a gap down, a gap and crap, something of the like. Then it'll morph to a daily chart reversal and ultimately reverse or resort to a weekly chart reversal situation. We have nothing of the like. Therefore, and these are things that are taught in the course, in the class, MSF Masterclass Series, how to and when to identify these signs and or signals of trend changes we can take action on and know where we can trade against. These are important things in the market. What about the financials? If there's nothing materially wrong with the financials, it's unlikely the rest of the market is going to fall apart. Any material change in the financials from last week? The answer is no. The trend is your friend above all the moving averages, around new highs, around all-time highs. There's certainly nothing wrong with the financials. We can simply move it along. And we go over to the semis, which is a pretty darn good proxy for the tech space, up almost 1.5% today, $3.64 above all the moving averages. Anything wrong with the SMH or the semi space? No. What have we been talking about last week? If they get above the convergence of these moving averages, they'll start to get into no man's land and work their way up to what? Up to the gap. What are they doing now? They're working their way up to the gap. There's no magic here. It's not voodoo. This stuff is pretty simple when you look at it from a common sense and logical perspective. You want to learn how the market works? Stick around. I'll teach you. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.